Ron Siegel Radio, your home and mortgage connection.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit in current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And then remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you, and you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do have a great team when it comes to developing a financing plan or plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference. 800-306-1990, 800-306-1990. 1990, and yes, of course, we are celebrating today. Celebrate every day on Ron Siegel Radio. It's National Grape Popsicle Day. Yeah, okay. Do you like grape popsicles? Do you like popsicles? I don't know if it's an old-time thing or what. My wife just found them. I like those popsicles that they've got the, kind of like a creamy thingy in the inside. But I don't know what they're even called, but I just call them more. Give me more of them. Used to get them on the ice cream truck 100 years ago when there were ice cream. I don't know if they're even ice cream trucks anymore. I haven't seen any in a long time. Of course, you've got to wonder on some of them, what are they selling? And I'm not sure that, if I had young kids, I'd let them be out there buying off of an ice cream truck. It's a shame how some of these things have gotten, over the last 15 or 20 years, some things that we took for granted. Today's also National Grape Day. I like my grapes distilled, please, 48 months in French oak, if you don't mind. Oh, wait, and what is your favorite grape? What's your favorite grape? Red or green? Or maybe it would be Cabernet grapes. I don't know. So, yes. Now, here's another one. National Cellophane Day. My son loves tape. My grandson loves to play with tape. Okay. Let's see what the markets are doing today. Do we want to see what the markets are doing today? It's kind of funny when you watch what the markets are doing because eventually they're going to catch on. And I was having a chat this morning. I was just doing the text version. But, people got all sideways last week when President Trump announced that he's recommending 50% tariffs on the EU. Market drops. Over the weekend, we'll delay it until July 9th. And now the Dow Jones Industrial Average is up 600 points. The S&P 500 is up 99. The NASDAQ is up 399. When will these markets learn? He's a negotiator. He's always negotiating. So why do they act on every single word that comes out? Unreal. Speaking of acting on every single word that comes out, I don't know if I even, I ran around, did a lot of running around last weekend. Did you have a good weekend? Memorial Day, the days leading up to Memorial Day. I was back and forth. It was nice and cool. I like, it's supposed to be hot this coming week. Josh, you're probably in triple digits up there at the end of the week. Yeah. Josh is out there in Nevada, triple digits. Send me out to Newport Beach. I don't think it got above 68 over the weekend. That was pretty nice. But the downside is, if you are familiar with Orange County, I go up and down the 55 freeway, several times over the weekend. And gasoline here in the formerly Golden State, $4.85 a gallon. $4.85 is our average for a gallon of gasoline. And you look around the country, nobody's close to us. Washington's the closest at $4.41, although Hawaii's at $4.47. Unreal. And our governor says they're going to sue the Trump administration over the EV, changing the EV mandate. Now, we can't even make enough gasoline here. Our prices are going up. And they say maybe by $8 a gallon by next year. Yet, what does it take to make electricity? Oh, yeah, fossil fuel. Unbelievable. Well, we closed our nuclear power plant because we don't want power here. It's amazing how with our state legislature, we have a lot of people, need a lot of power, but we don't want to create any of it. No nuclear, no ocean. The windmills don't work. We don't want to have refineries. What's the plan here? I think our state legislature, the word of the year in our state legislature is no, because they have no answers for everything. It's just, whatever Trump says, we don't want it. Whatever's out there, we don't want to do it. Unbelievable. Now, what's going on in the world? Mortgage rates, will they ever be 3% again? Or article in Yahoo Finance is asking that question. And I'm going to share with you, do we want them at 3% ever again? I'm going to say no. Why would I say no to 3% mortgage rates? Well, I've been doing mortgages for a very, very long time. And the issue is, when do mortgage rates get to 3%? When our economy is in danger, in bad shape. The Great Recession, we got down to 3%. The COVID shutdown, we got down to 3%. I think if I look back, and I wasn't around then, World War II, we might have been in the 3% range. The norms are about 7.5%. So right now, when we look at mortgage rates, and as of Friday on Mortgage News Daily, they said 7.02%. 7.02. Yet, what are the builders doing? Why are homeowners not doing what the builders are doing? Why, even worse, why aren't real estate professionals teaching the homeowners what they should be doing to get their houses sold? Now, I saw, when I go through and look at the MLS, I look at price reductions, and I wonder, why are people doing price reductions when the problem is not necessarily price? What is the holdback of home selling? Affordability. Now, there are three components of affordability. Home price is one, wages are another, and interest rates or payment is the third. Well, as a home seller, you want to maximize the price, okay? So we don't want to give it away. You can't control buyer wages, but you can influence the payment and the interest rates. We're going to talk about that. Why aren't you doing it? Maybe because your agent doesn't know how, or no one's told you about it. We're going to tell you today. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. Common real estate terms explained. Many veterans don't know about this VA home loan benefit. Should you file that home insurance claim? All that and more. Reach me anytime. Off-air number 800-306-1990. 800-306-1990 or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Siegel Radio. Your home and mortgage connection.
Are you a veteran, own a home, and need money? The Siegel lending team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel lending team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452. You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. Every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates, with consumers across 35% of all mortgage transactions nationwide. If you don't know that, now OBMMI, they only tell us the interest rate that loans locked at. They don't tell us APR, points paid, points received, none of that. Just the rate. What do you do with the rate? Because you don't have an APR. Well, the APR, I'm not a big fan of it anyway. It's a law, so we have to talk about it. But you take the interest rate and put that into your mortgage calculator to find out what your monthly payment is. Now, if you don't have a mortgage calculator, you should. rsrlinks.com/mobile app. rsrlinks.com/mobile app. What did rates do on Friday? Well, we're looking at the 30-year conventional fixed, 6.922, jumbo 30-year fixed, 7.068, FHA 30-year fixed, 6.655, VA 30-year fixed, 6.456, the USDA 30-year fixed, 6.434. The only ones that were down was the conventional and the VA loan. And, oh, yeah, the Home Select. I'm sure that probably, well, I didn't look at it, so I'm not going to say anything, but it is the best loan on the market, even though it has the highest interest rate and saves you more money than anything else I've ever seen. You got to love the fact that most people just don't understand how the banks get so rich by charging you more money. Just throw that out there for you. Now let's see what the markets are doing today. We're going to take a look, and we will see that the S&P 500 is now up 102 points. Wow. Yeah, we like to see that one. And let's see if we can find out what the 10-year Treasury is doing. Well, the 10-year Treasury is down 7.9 basis points. Call it 8 basis points. We like that idea when the 10-year goes down, because the mortgage interest rates generally follow it. And I look right now at the mortgage-backed security, the 6% coupon is up 22 basis points. That's the bond. Bond goes up, rates go down. We like that. So what's driving all of this? Well, there's a lot of misinformation out there, and I'm going to talk to you about that in just a minute. And we talk about it on a regular basis because so much of the media is biased. They've all got their opinions, and it's kind of like rear ends. Everyone has one, and they all stink. So Fannie Mae has now come out with and lowered their forecast for 2025 for interest rates from 6.2 to 6.1 and from 6 to 5.8 for the end of 2026. If these predictions are correct, we could see a refi boom. According to ICE, there are around 4 million loans eligible to refi if we hit that range. To give some context, there are only 1.3 million refinance loans done in all of 2024. So obviously this spike in activity would be very welcome. If you haven't already watched it, shame on you. rsrlinks.com/2step. rsrlinks.com/2step. And we show you what to do to get ready to refinance. rsrlinks.com/2step. Case-Shiller and FHFA appreciation reports for March. The Case-Shiller Home Price Index, which is the gold standard for appreciation, showed that home prices fell 0.3% in March on a seasonally adjusted basis. The raw figure was stronger at 0.8%. This is lagging behind 2 months, and it's for March before we typically see home prices rise further with the spring home buying season. Year over year, home prices rose. No, they didn't fall. They rose 3.4%, which is a moderation from 4% in the previous report. What does that mean? Well, when you hear some of the folks, Diana Olick, that are telling you that home prices are dropping, no, they're not. It's like if you're driving down the freeway at 75 miles an hour, you see some police activity, and you slow down to 65 or 70, whatever the speed limit might be. Are you going backwards? No, you're just not moving as quickly forward. So you're still going forward, but just not as fast. The 10 and 20 city indices were higher than the nationwide figures, showing that the big cities are outperforming the rest of the nation. 10 city index is up 4.8% year over year. 20 city is up 4.1%. FHFA, Federal Housing Finance Agency, released their house price index, which measures home prices appreciation on single-family homes with conforming loan limits. Different than Case-Shiller, it does not include cash buyers or jumbo loans. The FHFA reported that home prices fell 0.1% after seasonal adjustments. Year over year, home prices are up 3.7%, which was again a deceleration, not backwards, from 3.9% in the previous report. Home prices are still appreciating. Durable goods orders, which measures larger durable purchases in the U.S., fell by 6.3% in April, which is a bit stronger than the negative 7.8% expected decrease. Core durable goods was reported up negative 1.3% lower than the flat reading expected. Core shipments, which gets directly plugged into GDP, came in at negative 0.1%. As anticipated, was offset by a positive revision to last month's figure, going from 0.2 to 0.5% increase. We're going to be getting the Fed's favorite measure of inflation at the end of the week. That would be the PCE report. Those are the numbers that get that make the Fed really excited. And I will tell you that consumer confidence came in very, very strong this morning at 98. So this is a survey that's done on a monthly basis. They were expecting an 87. Last month's was revised downward from 85.7, and now it's at 98. So people are excited about the economy right now. I wonder why. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990. 800-306-1990. And let's chat a little bit about some of these existing homes and some of the data that's out there, and maybe some data that's getting you incomplete or incorrect information. And what I'm looking at right here is a growing divergence between new and existing home sales with deeper economic signals, consumer sentiment, cancellation rates, pricing trends, and inventory levels, painting a sobering picture of waning housing demand. Builders are increasingly turning to discounts to spur sales, but elevated inventories and economic uncertainty suggest price pressures are likely to continue. What the heck does all of that mean? Well, what I want to talk to you about is exactly that. So existing home sales fell to a 7-month low of 4 million units. SAR missing nearly all Bloomberg survey estimates. New home sales initially appeared strong at 743,000 SAR, but after backward revisions, net sales were 676,000, above March's number of 670,000. Then we're going to look over at, and I'm trying to get a report here that I want to be able to talk to you about as we go through this. There it is. Combined new and existing single-family home sales saw a modest plus 1.5% month over month. Long-term sales trends shows 12, 24, and 36-month declines of negative 0.6%, negative 1.2%, and negative 20.7% respectively. Consumer sentiment deteriorated. University of Michigan index at 69, below recent averages. Fannie Mae's home purchase sentiment dropped from 75 to 69. Redfin reported 56,000 contract cancellations in April, 14.3% of pending sales, highest April rate since at least 2017. What does all of this mean to you? Well, it's exactly what I've been telling you for the last several days. And I started the broadcast today sharing this information with you. So here's the deal. What are builders doing that existing home sales agents are not doing and that no one's probably telling you about? Well, it's home affordability. That's where the problem is. It's all about home affordability. And I told you a little bit ago that interest rates, let's just call it 7% for round numbers. Everyone's got a little bit of a different take on the numbers, but I'm looking Mortgage News Daily 7.02. Freddie Mac says the 30-year fixed rate is 6.86. Mortgage Bankers Association 6.92. And I think we said that OBMMI, they are, again, our go-to source. They were at 6.92. I'm going to, for sake of ease, just call that 7%. Now, at 7%, there's a challenge right there because the monthly payment at 7% is $3,329. Now, what would a builder do? Well, they'd go out there and say, what if we could get this for you at 5.99%? Well, at 5.99%, that payment drops about $400. Now, I started the broadcast this morning talking to you about home affordability. And when we're talking about home affordability, we're dealing with the price of the property. We're dealing with the wages. Okay, as a home seller, you want your price of your property, you want to maximize that. You actually want the net number to be maximized. You can't do anything about wages and the payment or interest rates. So the only thing that you really have a lot of control over is the payment. Now, what if we go and subsidize that payment and say, okay, instead of, I just saw somebody did a 15% price reduction. Now, I'm going to suggest, how about doing a 5% price reduction? With a 5% instead of 15, now you can save that buyer, call it $350 a month. That saves a lot of money, and it helps your real estate professional with advertising. What's the market saying right now? The market's out there saying 7%. If you look at all the news stories, everybody's rounding off interest at 7%. Then now you're going out there and saying, no. This property, if you qualify, has a 5.99% interest rate associated because the buyer is working with a lender to help subsidize that rate. Now, it's got to be done the right way. If it's not done the right way, and not all lenders understand how to do it the right way, then you could end up having a problem. Got to work with somebody that understands these things. And oh yes, our team does understand it. We've been doing it for more than a decade. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, what are we going to talk about? We're going to talk about common real estate terms. Many veterans don't know about this VA home loan benefit. Where should your credit cards really be? And should you file that home insurance claim? All that and more. Reach me anytime. Off air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube, Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Confused about the home buying process? Or curious how much you really know about buying a home? Take the First Home IQ quiz to test your understanding of buying a home. Created by the nonprofit First Home IQ, this 5-minute quiz will give you a score, what you missed, and why. Take the quiz in 5 minutes at rsrlinks.com/FHIQ and find out what you need to know about buying your first home. That's rsrlinks.com/FHIQ.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Common real estate terms explained. If you're a first-time home buyer, chances are you'll come across some terms you're not familiar with, and that can be overwhelming, especially while going through one of the biggest purchases of your life. The good news is you don't need to be an expert on real estate jargon. That's your agent's job. But getting to know these basic terms will help you feel a lot more confident throughout the process. Every homeowner should know. Once you're familiar with this terminology, you'll have a better understanding of important details from contracts to negotiations. So when those big conversations happen, you'll feel informed, in control, and able to make the best decision for your unique situation. As Redfin puts it, quote, having a basic understanding of important real estate concepts before you start the home buying process will give you peace of mind now and could save you a fortune in the future. Here's a breakdown of a few key real estate terms and definitions you should know. According to the Federal Trade Commission, FTC, and First American, appraisal, a report providing the estimated value of the home. Lenders rely on appraisals to determine a home's value, so they're not lending more than it's worth. Remember, that's the value that the lender has on it, not you, not the seller, not the buyer or the seller. Contingencies, contract conditions that must be met, typically within a certain time frame or by a specified date. For example, a home inspection is a common contingency. While you can waive these to try and make your offer more competitive, it's generally not recommended. Closing costs, a collection of fees and payments made to the various parties involved in your home purchase. Ask your lender for a list of closing cost terms, including attorney's fees, taxes, title insurance, and more. Down payment. This varies by buyer, but is typically 3.5% to 5% of the purchase price of the home. There are even some 0% down programs available. Ask us for more information. Chances are, unless specified by your loan type of the lender, you don't need to put 20% down. Escalation clause is typically used in highly competitive markets. It's an optional add-on in a real estate contract that says a potential buyer is willing to raise their offer on a home if the seller receives a higher competing offer. These clauses also include how much a buyer is willing to pay over the highest offer. Mortgage rate, the interest rate you pay when you borrow money to buy a home. Again, call us so you know how it can impact your monthly mortgage payment. Pre-approval letter. Got to get the certified buyer program. And Josh, I just did this. rsrlinks.com/certified buyer. rsrlinks.com/certified buyer. Now, this includes a letter from your lender that shows what they're willing to lend you for your home loan. This, plus an understanding of your savings, can help you decide on your target price range. Getting this from a lender should be one of the first steps in the home buying process before you even start browsing homes online. You don't need to have all these terms memorized, but a little knowledge goes a long way. Brushing up on the basics now means fewer surprises later and more clarity when you buy a home. What unfamiliar real estate term or phrase have you come across that was not on the list? Give me a call. Let's talk it through so you have a solid understanding of what it means and where it may show up in the home buying process. That is the real-time real estate segment brought to you by rsrmoney.com, rsrmoney.com. Borrow Smart segment today being brought to you by gethomeselect.com, gethomeselect.com. At Ron Siegel Radio, we bring you the facts that empower your home ownership and financial future. I am Ron Siegel, your host and certified liability advisor, helping families build wealth through strategic debt management. Today, we're tackling a tricky question that comes up more often than you might think. Should you file that home insurance claim or not? Filing might seem like the obvious next step after damage or loss, but not so fast. I think I've got that right over here. Don't rush. Sometimes filing a claim could cost you more in the long run than it's worth. Let's talk about the basics. Home insurance is there to protect you from financial catastrophe. But is it there to protect you from every little ding and dent? Not always. Here's the truth. The simple act of filing a claim can raise your premiums, even if the claim is not paid. One recent study showed that homeowners see a 9% average rise in their premium after filing a claim. And that's just the average. Depending upon where you live, it could be higher. So before you reach for the phone or your app, ask yourself a few key questions. Question 1, is the damage worth more than your deductible? If your deductible is $1,500 and the damage is only $1,800, you're essentially spending time, stress, and potentially a future premium hike for just a $300 payout. And then it could cost you far more in higher premiums over the next several years. Question 2, are you even covered for the damage? You'd be surprised how many homeowners file claims without checking coverage first. Think water damage from a flood, often not covered unless you have a separate policy. And even if the insurer denies the claim, just having filed it can still increase your future rates. Pro tip, always read your policy, or better yet, review it with your insurance agent before you file anything. You'll avoid nasty surprises. Question 3, have you filed claims in the past 7 years? Most insurance companies track claim history through a shared database. That means even if you switch providers, they'll see you filed that roof claim back in 2021 and that broken window claim in 2023. More claims equals more risk equals higher premiums. And remember, 7 years is a long time. A short-term benefit short-term benefit could lock you into a long-term penalty. But there is one exception you should never ignore. If someone gets hurt on your property, trip, fall, dog bite, you should file a claim immediately, not because of the property damage, but because of liability. Filing a claim puts the insurance company on notice in case the injured party sues. Lawsuits can escalate fast, and you don't want to be caught without protection just to keep your premiums low. What this means for you, here's the big takeaway. Filing a home insurance claim is a strategic decision, not just a reaction. You have to weigh the math, the policy fine print, and your history. Recap, number 1, small claims below or near your deductible, probably not worth it. Number 2, not sure you're covered? Check first, don't assume. Number 3, multiple claims in the last 7 years, think twice. Number 4, someone injured, file it, protect your liability. Number 5, talk to a licensed agent before filing, not after. Why this matters right now, with premiums rising nationwide and many insurers tightening standards, you don't want to give them any extra reason to raise your rates, or worse, drop your policy. If you're not sure how your current policy stacks up or whether you're overexposed, we can point you to the right insurance professionals or walk you through a liability checkup. Visit rsrlinks.com/Sora, rsrlinks.com/Sora for a 30-second review that could help save you thousands. Bottom line, remember, friends, protecting your home is about more than bricks and mortar. It's about protecting your financial future. I am Ron Siegel, Certified Liability Advisor. Until next time, stay safe Stay smart. Stay tuned. To schedule your complimentary liability checkup, again, visit rsrlinks.com/Sora, rsrlinks.com/Sora. That is the Borrow Smart segment, brought to you by gethomeselect.com, gethomeselect.com. You are listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, many veterans don't know about this VA home loan benefit. Where should your credit cards really be, and more? Reach me anytime. Off-air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numero 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Borrow Smart segment today being brought to you by gethomeselect.com, gethomeselect.com. Where should your credit cards really be? Welcome back to this Borrow Smart segment, again brought to you by gethomeselect.com and Ron Siegel Radio, where we help you navigate the path to home ownership, retirement readiness, and smart debt strategies, because smart borrowers borrow smarter. Now, let's talk about one of the most asked questions I get, whether I'm helping someone buy their first home or refinance for a better rate. Ron, I've got the money to pay down my credit cards, but where exactly should I pay them down to? Great question. And like any great answer, it depends. But I've got some real numbers and insights today that'll give you clarity, confidence, and maybe even a credit score boost. Let's break it down. Understanding credit card utilization. Credit card utilization is simply, in theory, it's how much of your total credit limit you're using. But the impact on your FICO score, that's no joke. It makes up a full 30% of your FICO 2, 4, and 5 score models. The ones mortgage lenders like yours truly actually use. So where should those balances land? The gold standard, 10%. If your credit limit is $10,000, keep your balances around $1,000. That's the sweet spot. Why? Because it proves you know how to use credit, not just avoid it. Contrary to popular belief, zero balances don't score as high as 10% usage. Credit is like a muscle. You've got to flex it. Tip: use your credit cards at least once per quarter to keep them active and reported. A dormant card is like an idle engine, not helping your credit file. Make sure you watch rsrccpayment.com, rsrccpayment.com. The danger zone, 30%. Now, 30% isn't bad, but it's a ceiling. Cross it, and you'll likely see your score start to sag. So on that same $10,000 limit, you'd want to stay under $3,000. Once you're consistently above that, it starts looking like you're living on borrowed money, and that makes underwriters nervous. How this impacts your mortgage, if your goal is to buy a home or refinance, and let's be honest, that's why you're tuning in, then better utilization means better credit scores, which means better rates, and ultimately lower payments. That's why that's what I call borrowing smart. And by the way, there's a system I use personally and recommend every client. It helps people just like you stay on top of this without having to track it all manually. How to get loan ready with the right tools. Here's the real reveal, or the real value that I want to share today. You're not on your own when it comes to getting your finances dialed in for a home loan. Our partners at Blue Water Credit offer 3 powerful tools. Actually, we kind of do these for you in conjunction with Blue Water Credit. Credit monitoring, rsrlinks.com/FICO, rsrlinks.com/FICO. Stay on top of usage and get updated monthly credit reports. This is how you track progress and dispute errors that may be dragging your score down. Number 2, budgeting tools. This builds a custom plan for your debt payoff based on your income and expenses. No more guessing. It's strategic. It's automated. It works. rsrlinks.com/Sora, rsrlinks.com/Sora. Personalized coaching. Get real humans, loan readiness coaches who walk you through what to do so that you're ready to roll when it's time. We always say don't wait to get ready when you could be ready now. That's why this tool is such a game changer. And yes, you can get started today. So let's recap. 10% utilization, that's ideal. 30%, the upper limit. 0, not optimal. And Ron Siegel Radio, that's the bridge from where you are to where you want to be. Whether you're 6 months out from a loan or hoping to buy in the next 30 days, managing credit card balances the right way could be the difference between approved and not yet. If you're not sure where your balances should be or what order to pay things down in, we can help. Visit rsrccpayment.com for a free guide on how to pay credit cards for maximum FICO impact. And if you're serious about getting loan ready, take 30 seconds and start your liability checkup at rsrlinks.com/Sora, rsrlinks.com/Sora. Together, we help you buy smart, borrow smart, and live better. Thanks for listening to Ron Siegel Radio. I am Ron Siegel, your certified liability advisor, helping you build wealth through strategic debt management. That is the Borrow Smart segment, brought to you by GetHomeSelect.com, GetHomeSelect.com. Borrow Smart segment today. I'm sorry, the real-time real estate segment today. Real-time real estate segment today being brought to you by rsrmoney.com, rsrmoney.com. Many veterans don't know about this VA home loan benefit. For 80 years, Veterans Affairs, VA home loans have helped countless veterans buy a home. But even though a lot of veterans have access to this powerful program, the majority don't know about one of its core benefits. According to a report from Veterans United, only 3 in 10 veterans are aware they may be able to buy a home with no down payment with a VA loan. If you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk, AM 1490, FM 98.1 video feed, you are seeing a chart. The majority of veterans are unaware of a key VA loan benefit. That means 7 out of 10 veterans could be missing out on a key home buying advantage. That's why it's so important for veterans and anyone who cares about a veteran to be aware of this program. As Veterans United explains, VA home loans, quote, come with a list of big benefits, including 0 down payment, no mortgage insurance, flex insurance, flexible and forgiving credit guidelines, and the industry's lowest average fixed rate interest, unquote. Benefits of a VA home loans. These are loans designed to make buying a home more achievable for those who have served. And by extension, they also give their families the opportunity to plant roots and build equity in a home of their own. Here are some of the biggest advantages for this type of loan, according to the Department of Veterans Affairs. Options for no down payment. One of the biggest perks is that many veterans can buy a home with no down payment at all. Limited closing costs. With VA loans, there are limits on the types of closing costs veterans have to pay. This helps keep more money in your pocket when you're finalizing your purchase. No private mortgage insurance, unlike many other loan types. VA loans don't require PMI, even with lower down payments. This means lower monthly payments, which can add up to big savings over time. If you want to learn more, your best resource for all the options and advantages of VA loans is your team of real estate expert professionals, including local agent and us, your trusted lender. Yes, we are a veteran mortgage advisor, certified. VA home loans offer life-changing assistance, and trusted lender and agent can help make sure you understand the details and are ready to move forward with a solid plan. Do you know if you're eligible for a VA home loan? Give us a call. We will check with you and check for you. Got to get the information from you so we can go and get you the golden ticket. And if you haven't got the golden ticket, the certificate of eligibility, Well, you just don't really know if you're eligible or not. That is the real-time real estate segment brought to you by rsrmoney.com, rsrmoney.com. I think we have time for another real-time real estate segment brought to you by rsrmoney.com, rsrmoney.com. Thinking about an adjustable rate mortgage? Listen to this first. If you've been house hunting lately, you've probably felt the sting of today's mortgage rates, and it's because of those rates and rising home prices that many home buyers are starting to explore other types of loans to make the numbers work. And one option that's gaining popularity, adjustable rate mortgages. If you remember the crash in 2008, this may bring up some concerns, but don't worry. Today's ARMs aren't the same. Here's why. Back then, some buyers were given loans they couldn't afford after the rates adjusted, but now lenders are more cautious and they evaluate whether you could still afford the loan if your rates increase. So don't assume the return of ARMs means another crash. Right now, it just shows some buyers are looking for creative solutions when affordability is tough. And I would suggest only the smart buyers are using adjustable rate mortgages. 30-year fixed rate loan, that's the best loan on the market for bank profitability. You can see recent trends in this data from Mortgage Bankers Association. More people are opting for ARMs right now if you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk, AM 1490 and FM 98.1 video feed. You are seeing the chart of more buyers using adjustable rate mortgages. Yes, the Home Select loan is an adjustable rate mortgage. And yes, it is the best home loan on the market. Want to know about it? GetHomeselect.com, GetHomeselect.com. And while ARMs aren't the right for everyone in certain situations, they do have their benefits. How an adjustable rate mortgage works, here's how Business Insider explains the main difference between a fixed rate mortgage and an adjustable rate mortgage. Quote, with a fixed rate mortgage, your interest rate remains the same for the entire time. This keeps your monthly payment the same for years. Adjustable rate mortgages work differently. You'll start off with the same rate for a few years, but after that, your rate can change periodically. This means that if average rates have gone up, your mortgage payment will increase. If they've gone down, your payment will decrease, unquote. Of course, things like taxes or homeowners insurance can still have an impact on a fixed rate loan, but the baseline of your mortgage payment does not change much. Adjustable rate mortgages don't work the same way. Pros and cons of an ARM. Here's a little more information on why some buyers are giving ARMs another look. They offer some pretty appealing upsides, like a lower initial rate, as Business Insider explains, quote, because ARM rates are typically lower than fixed rate mortgages, they can help buyers find affordability when rates are high. With a lower ARM rate, you can get a smaller monthly payment or afford more house than you could with a fixed rate loan. On the flip side, just remember, if you have an ARM, your rate will change over time. As Barron's explains, there's potential for higher costs later. Adjustable rate loans offer a lower initial rate, but recalculate after a period that is a plus for borrowers if rates come down in the future, or if a borrower sells before the fixed rate ends, but can lead to higher costs if they are hold onto their home and rates go up. So, while the upfront savings can be helpful now, you'll want to think about what could happen if you're still in the home when your initial rate ends, because while projections show rates are expected to ease a bit over the next year or two, no forecast is guaranteed. That's why it's essential to talk with us and your financial advisor about all your options and whether an ARM aligns with your financial goals and your comfort with risk. Right now, ARMs can offer some big advantages, but they're not one size fits all. The key is understanding how they work, weighing the pros and cons, and thinking through if they'd be something that would work for you financially. And that's why you need to talk to a trusted lender and financial advisor, certified liability advisor, before you make any decisions. That is the real-time real estate segment brought to you by rsrmoney.com, rsrmoney.com. And as always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. Big thanks to Josh and Sean who are engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990 at RonSiegelRadio.com. And remember, make a lot of money. So you help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.